Welcome everyone to the Kendall Report. It's 9 p.m. Eastern, and we've got a fair amount to talk about. First thing I want to make an announcement. I am going to do a live stream tomorrow, the final hour, like I did last week, and I'll go through some more details of what I'm going to reveal to you tonight. But I want you to understand what an absolute farce this whole debt ceiling thing is. And we'll talk more detail. I want to show a couple clips tomorrow. I'm not going to do them tonight. I'll get it all organized before tomorrow at 3 p.m. Eastern. So we'll get it all set up. But let's just take a look back here. A couple things that I've been talking about. What we've been seeing for the past three sessions. Friday, we saw the big rally. Monday, sell-off. Today, back toward the highs. We've been absolutely stuck in this range. And we were up when the futures opened a little bit ago. Now we were down 10 handles. So we're just still seeing a lot of indecision. And it's what I talked about yesterday. As far as what happened yesterday, it looks like mostly short covering and folks having fun trading. And now we're coming into ADP and we're getting a little more serious as far as the news goes coming into the week. And so let's just take a look back at yesterday a little bit further. S&P up 1.1, Nasdaq up 1.3, Russell up 0.5. We saw the 10-year come back above 150 to 152. And we're just seeing this gyration back and forth. And I love the trolls because they love to look at thumbnail names and tell me how wrong I am, but they don't actually watch the videos, I don't think. What I set up for last night was really, I thought we would see possibly an R2. We did exceed that a little bit and traded up to an R3. And we saw a decent reversal. The high on the futures yesterday was 59, 43.59, and we're at 26. We're roughly 33 handles off of the high of yesterday, off the top end of that range. One of the things for sure that we've seen is volatility has kicked up. We had just about 100-point range, about 90 handles yesterday on the futures based overnight. I'll go through all the details here in a minute in the technicals, but I want to unpack a little bit what I want to talk to you about and just what we're seeing. Just about every area of government couldn't be more corrupt than what we're seeing here all the time. So here's what's going on, and I'll go through a lot of details tomorrow about this. But Janet Yellen did an exclusive interview this morning on CNBC, and she was telling us, if we don't raise the debt ceiling by October 18th, that the whole world's going to come to an end and the U.S. is going to fail and we're going into recession and all these things. And if you watch her speak, if you understand some things, when people look down, they tend to realize that maybe they're not being 100% truthful or whatever's going on. But there's something out there, and I'm going to reveal this tonight, talk more about it tomorrow. But there is something very easy to do. All the Congress has to do is amend the one bill, the debt ceiling bill. There's an amendment they can make. They can just raise it. They can do it with the Democratic Party. There's 50 votes in the Senate, and they need one vote more so they can use the vice president. And voila, the debt ceiling is increased, and it's not even a problem. They can do whatever they want with it, but they want to build this drama and play all of these games right now and try to set it up so that nobody, so it's somehow, the other side of the street is the problem. And they have to set it up this way to make all the drama. They've got to cover for the complete failure of the infrastructure bill, and now they've moved that to the end of the month for a vote. We all know all of these crazy things that are going on. They can't get anything done right now. And I told you a couple of weeks ago, if they didn't get this thing done really quick, it was going to be nearly impossible to get done. So we'll see exactly what happens with that stuff. But back to this debt ceiling thing, this is the biggest joke that has ever been on the planet. And like I said, I'm going to show you some clips tomorrow, and actually Janet Yellen admitting that all they have to do is amend the budget resolution and the ceiling's gone. So why are they doing this? Just what I was just saying is they're really looking at just trying to make it look really dramatic. It's all theater right now, and what a sad thing. And I didn't really ever have a great regard for Janet Yellen, but she's become a really interesting person in as the Treasury right now and what she's revealing. So more on that tomorrow. If you want to, there's some other things that I think will be significant, and we'll see who plays chicken the best, whether the Republicans show up with a few votes or they make the Democrats do what I just said. So more on that. Like I said, I want to show you some clips. But as we, really look at everything that's going on here, there's nothing going on except for increase in volatility. I mentioned on Twitter, I tweeted out that this 4260 level is becoming an interesting point. We've bounced off of that a couple times. Like I said, on Friday, we bounced off of that number and then rallied up, closed strong. Monday, we sold off. Today, we rallied back up. And now we're seeing some selling. We're down almost 11 handles as I'm speaking on the S&P futures right now. So we're just seeing this back and forth, as I said. As far as what came out yesterday, I thought it was really nothing out there. ISM non-manufacturing was up to 61.9. It was expected around 60 and 60 and a half, maybe 67, depending on who you're talking to. That was all that was out. So there was no news influence. This was, as I mentioned, just all short covering, nothing really going on there. Today we're going to have ADP report coming out, expected to show 400K jobs. Is this going to matter? I don't think so, unless there's some huge number either way. I don't think this really matters. I think everybody's focused on employment numbers coming out on Friday. And of course, we've got claims and continuing claims on Thursday, the typical stuff that we have to deal with. But I think that what we're likely to see out of that report, maybe it comes in as expected. But it's not really material. Very seldom does the ADP report have any real correlation to the employment numbers. So folks are just going to play into this number, I think, as we go for the next couple of days. There'll probably be some backfilling, more sideways, but we definitely have, you'll see when I go through all of the what's going on with the PPMs and the market grid and all those things. You'll see how it's set up here in just a few minutes. So let's go ahead, as I usually do, and we'll get set up for the database review. And not a lot is going on there. So I'll just zoom in on this so you can see it a little better. So yesterday we were at 2104 on the database, 2104 bullish. Today we're 2177. There were 253 buys, 486 sell signals, and there was a net 233 symbols picked up on the database out of the 16,333. So even though we saw this big rally, we saw the same thing basically on Friday's rally when we came into Sunday night. We saw some traction, but nothing really big. But what we did see was intermediate database starting to roll over. We're at 42% there. So there's a lot of starting to see attrition on the bigger trends now. The short-term trends are really neutral to negative, we'll call it. I've talked about these numbers a bit. If we drop below 17% bullish, we might see what I call full liquidation down below 10%. We'll see if that happens. I don't have any expectation either way, actually, on that. But we're definitely seeing this thing set up at this level. and that's exactly what's going on. So I see somebody tell me it's not the current numbers. I don't know how it's not the current numbers, but it is. So this is what's on here right now. The server just finished running. That's why I waited. Last night's percentage was yeah. So I have my sheets from last night, so I showed 20. It's, you know, and I see what you folks are talking about. Let me check something here real quick. Okay. Yeah, so I was waiting for the servers to run, so you guys thank you. You caught me. Okay, 2338 is the number now. And so we did see a little bit more buy. We got 618 versus, we'll call it 200 exits. Okay, thanks a lot for that. I appreciate it. So 23.38. So the net here, instead of what I said it was actually a little bit better than that, but nothing material. So thanks for catching that. I've been waiting for, that's why I was so late. I was waiting for this database to update. So it literally just finished when you folks said that. So that's awesome. So yeah, so anyway, same dialogue, nothing really changes. I appreciate you guys keeping me honest here. I thought I'd seen the update. I had some numbers anyway. So good news, we got the right numbers now. So, but nothing's really material here, right? What we're seeing is actually this churning, and you know that's not even, I can't even call that encouraging at 23.38. A couple, you know, maybe what, I'm just looking here, maybe four plus 500 net buys. So nothing really big here. So it depends on, you know, that I didn't get a chance. A lot of times I can review what kind of signals are coming out and give you some feel for that, but we're still just kind of like grinding out here. So yeah, so the daily did change. So sorry for the confusion. Let me make this clear. 23.38 is the number now. Last night it was 21.77. So we're up a couple percent. So like I said, that's neither encouraging or not encouraging, but that's the numbers. Like I said, I kept waiting for this thing to finish. And the way our world works is we have to be able to pull in data from our data vendor, and they're on the East Coast, and typically they have them a little early. They were a little late, about 20, 30 minutes, and we can't get them until they post. So anyway, there's the right numbers. So let's get back into flow here again. Let's go ahead and we'll start to look at some of the numbers here. We're now, since I started talking, we're down now almost down 14 handles right now. So we're definitely seeing a little bit of reversal, but this is the thing that I think is really important to understand here. Is what we're seeing is like I said, the futures, and we can actually go back even further than that. We could go back last Thursday down, Friday up, Monday down, Tuesday up. Now we're starting to fade a little bit. Let's just look at the actual numbers here and see what kind of range we're likely to see from the viewpoint of the daily range. And like I said, we did get about 90 handles. So what we're seeing here now, which is somewhat interesting, we're starting to see this expansion of the grid. And the grid is actually adaptive based on some volatility look back. There's a combination of 3 and 5 day look backs that are looking at volatility. So we're definitely seeing expansion, and this just tells us we're going to keep up this volatility probably for the rest of the week, because by the time we'd have to contract substantially to cause this range to fall back in again. So we're definitely got some decent volatility, but look at PPM1. It is now minus 0.14. It's turning down. PPM2 is still negative, not quite in trend mode. PPM3 is negative. We're trying to get back below all three of the first and second derivatives here. And if that happens, then maybe we can get through these numbers. I still overall still expect to see us potentially trade down below that 42.60 number. Yesterday's low, if we look at yesterday's low, was 69. We go to Monday's low, it was 67. And then we go all the way into Friday's low, we're looking at 60 exactly. So this has been a place for the market to bounce. Whether we can get back below this or not, we'll see how that plays out. But here's what my expectations are for today. We're looking at 43.20 right now. We should see potentially S1, S2, but it's back under 43 handle, back to 42.85. I think we'll see R1, probably S2 today. R1's 43.57. That would basically be a retest of yesterday's high. I'm not sure we can get up there right now. We'll see how if the ADP or anything that's coming out is available at all. But that, as far as what's going to go on here, the other number that's out there, 4359.48, is the 10-period moving average, and that's also the cap. We saw it trade right up to that yesterday. 66 was the 10-period. We traded just below it at 59, and now we'll see what kind of reversal we get. If we take out, just like always, if we can take out some of these numbers, if we were to penetrate 42.85, all of a sudden we're back. S3, because of this increase in volatility, is now 42.59. But my expectations for the moment are R1, S2, probably a little bit of downside, especially as we start to come in to the range over the next 24 hours or so with all the, I guess, non-news that's coming out. Let's go ahead and take a look at the Nasdaq here. We'll get through the rest. We did see the Nasdaq yesterday had a high of 14,754, and it was just short of RTX. R3 is, we got a bit of a reversal off there. We finished at 14,655. Now we're printing down toward S1, 14,569. The low has been 596, so we're getting close to there. I do think we're just going to continue it in this range. Will be this R1, S2 on this as well. But as always, with the high volatility, if we print through R1, then R2 will be in play, and maybe we're going to continue this crazy volatility where we get R2, S2 on all of these indices. But the trend is clearly down on the Nasdaq. The PPM1 is at a minus 0.38, PPM2 minus 0.33. These are big time trend modes, and that tells us there's right now only about a 20% probability to get through 14,848, and that number is dropping about 50 handles per day. So keep that in mind when you're trading. So the Russell yesterday was only up 0.5. I'll show you that we'll continue to follow this very closely. We're right in these moving averages I've been talking about. We traded down to the 200-day. The 200-day is right now at, let me expand this so you can see it, 22.20. The low was 22.18. We closed at 22.28. And just looking at the daily averages in the pattern, I mentioned this yesterday, they're almost all the same, 22, 35, 32, and 31. That's the 10, 21, and 40. So they're virtually the same. The good news here is we are starting to see they're trying to turn up. And as I've been talking about, this still is the place where I would expect, if we're going to bottom in this range and we're not going to print through this 4260 bases, the S&P and some of these other numbers, then this index will probably, worst case, hold up better than the other indexes. And this shows right here. Let me get to the right chart here. If we go here and you look at this here, see the spread downticked a little bit. We could come back in for another day or so but I don't see this materially changing just yet. So I'll keep a close eye on that as we come in to the balance of the week through Wednesday and the balance of the trading. So for the rest of the show, it's going to be fairly brief. Like I said, I'll be live with you folks tomorrow at 3 o'clock. I'll come in roughly around the last hour of trade. So mark your calendar there tomorrow, and I'll do the final hour. And I just want to continue to talk about some of the stuff that is going on. It's like I've said many times, if you've been around me and know me personally and talk, is that we live in times where it's nearly impossible to figure out what's real and what's not, but it's becoming more obvious of what's real. And we'll talk about that more tomorrow. So what I'm going to do for the rest of this, we'll take a quick look at, I'm going to spin through the 10-year. We're going to do gold, and then we're going to do crude oil, which is now printing 79, by the way, and then I'm going to cover Bitcoin, but I'll do it 10-year, crude oil, gold, and then Bitcoin, because Bitcoin is just absolutely on fire. 51,106, trading up at some of the numbers that I've been talking about in the last couple of days. So that continues to be a really good bid, and I'll cover what I think what's going on there also here in just a few minutes. So let's go ahead and go to the 10-year notes. And as I mentioned earlier, we printed up to, this is going to get interesting because there's a lot of cycles hitting right now. We've got a potential for a cycle high, but this is the way this will be determined over the next couple of days. Is if we continue to move higher in this pattern, the market grid is suggesting that's the case. It's suggesting that around 154, 155 is going to be the number on the upside. On the downside, 151, right at 150. So we should see this market continue to move higher. I think it's going to move higher as we come in to the end of the week, and that will be probably print us up maybe at the higher end of the week. I don't think this is going to be a reversal downside, that this is a high cycle that's coming in. We could see a consolidation, but the rising 10 in here, we're looking at 1.41. That is a huge trend mode that we're in. ppm 2, 0.71, ppm 3, 0.39. These are all in trend mode. There's very little probability for this thing to reverse and drop down and even get close to 140 or anything like that. These things are just locked in this trend, and we're going to continue to see ultimately this thing move towards maybe back toward the 165 to 175, but that's weeks away from where we are at the moment. And like I said, it's just going to be interesting if they can, as I mentioned in the opening comments, if they can keep this rhetoric around the debt ceiling and see if they can scare anybody. That's the plan. If you like I said, I'll go through more details on that tomorrow, but that looks like the range for as far as that's set up. So let's go over, take a look at crude oil. Just continues to climb, 79.04 right now. Yesterday we printed 79.48. I told you I don't have the Fibonacci numbers on there, but 81 to 84 is the next target, but ultimately 90 plus. I wouldn't be surprised at all to see something even bigger happening. And I mentioned last night that maybe there's some things going on with Taiwan. We all know there's a interesting tension out there But Biden did tell us that him and Xi totally agree on on Taiwan, that they're not going to do anything. I have no idea what the Chinese are willing to do, but they're certainly doing a test. And those of us that have been around a while, we've seen these type of things before, where these foreign governments will. Everybody knows that China doesn't believe Taiwan is separate, so that in itself is a lie. So, but the point is that I've been talking about this for a while on this crude oil, is the disruption of money, of the supply. And if we get that disruption, I don't know where this thing could go. I mean, it could be a really big spike in oil, and maybe that in itself is enough to bring on something else. I'll try to cover, I'll make some notes to myself for tomorrow, is really as we come into employment numbers on Friday and beyond. We get into the numbers for October and November as we go forward. That's going to set up, I believe, a lot of the unemployment upticking, and we're going to start to see some real challenges there. Maybe we'll see some of those in the claims number on Thursday morning, but more on that later. But this crude oil trend is big, it's real, and I'm going to put the weekly chart up here for just a minute. We're trading up at the weekly pattern highs. So what we're seeing here, I'll bring this over a screen, go full. What we're seeing here is RXT is 71.8. Let me get the right number here. RXT is 79.90. We printed 48, so we're printing right up at the RXT number. The PPMs on a weekly are also very strong, and expectations are for an acceleration from these levels. So keep an eye on that. I think the energy sector and stocks are going to continue to be good, and just, yeah, we're not anywhere close to the end of this. Okay, so let's go to gold next. And, gold saw some selling early yesterday. Let me go to the daily. Yeah, gold saw this some selling, but one of the things I talked about last night, my expectations are we're going to stay sandwiched between the 1021. That is 1753 to 1769. So far overnight, what we're seeing is down a little bit, 1757. So we look at that 51 as a low. We look at the market grid, S1 56, S2 50, R1 65. So we should stay R1, S2 extreme for today. And it's possible if we see the interest rates tick up again, they do get up to that 155 number, something like that, then maybe we see the dollar tick up and continue to move toward that 95 handle. And I'll try to get through a lot of details tomorrow, and without getting into any major rants. So final market we'll cover here is Bitcoin. And this is the daily Bitcoin, and we're printing up at the low. I just want to point out, 4 sessions ago, I talked about this cycle low that was coming in. We're seeing the PPMs accelerate 1.54, 0.69 to 0.22. Basically, we're in trend mode all across the way. What the next event will happen is that the 10-period moving average will actually cross over the 40, and when that happens, we'll probably see some hesitation, but that will be the beginnings of the next move to the upside. And I'm going to go to the weekly just to show you how that's set up. I've been yelling and screaming for the last 4 weeks that this rising 10-period moving average on Bitcoin is going to draw it higher. That's 47,370 now. That's going to be, if you see that number, you can buy all day against that number. So that's your buy the dip level there. as we know, things get pretty volatile sometimes in Bitcoin. But that's the magic number. That number is actually rising right now, roughly 1,000 per week. So that's going to be 48.3, 48.5 as we come in to next week. But this is very close. Just looking at PPM, we're very close to an absolute explosion on the upside, I think, on Bitcoin. And I've showed you before, I'm going to put these numbers up here just while I'm covering this. I'm going to change the color of this just so you can see it a little better. So you'll see the yellow dots that come all the way across the screen here. This is the pivot number. I've been harping about this a lot. Is a ways away, but things can happen very quickly in this market. So 60,612, we'll get above that level. Then the next targets are, this should get recalced when certain things happen. We're going to have to get above the 53,000 level, something like that. And then we should see the Fibonacci targets get recalced. But for right now, the minimum target on the upside is actually 85,049. So this is really looking very positive. And the thing I want to talk about on this is, for the first time, we're basically seeing Bitcoin starting to emerge as maybe an alternative asset. We haven't seen that. I've been talking about this for a while. When the markets went down, Bitcoin went up, markets went up, Bitcoin went up. They don't seem to be correlated with the risk on, risk off trade that we've been seeing in the past. So we need to watch this for a little bit more to be able to confirm that that's what's going on. But all the patterns are set and ready to roll here. So I'm pretty bullish here, at least looking at testing that 60,000 level. And above that, it will be, there's an old thing, Katie bar the door, because this the market will be an explosive pattern at that point. So anyway, thanks for showing up tonight. And I will be live tomorrow at 3 o'clock Eastern time. And that will be where we will talk the next time. So we'll see you at 3 o'clock. Thanks for watching. And don't forget to subscribe and like these videos as well. Thanks again, everyone. Thanks for watching, folks. E-mini's now down 20 handles. Have a great night.